Hello, everyone, and welcome to the fourth masterclass of SEBI Manthan Ideathon program. My name is Sumit. I head the startup fintech initiatives at Startup Reso, and I'll be your host for the day. And with that, I would like to start with the agenda. But before that, what I'll do is I'll quickly talk a little bit more about the Manthan program, what we have been doing, what exactly is the overall program all about. So, Manthan Ideathon is a SEBI's initiative and which is started by the Innovation Sandbox team of SEBI, which focuses on innovation within the capitals and the securities market. SEBI, in association with BSE, NSC, NSDL, CDSL, K Fintech, CAMS, Lincoln Time, MCX, and NCDEX, started this initiative of collecting ideas which are focused around innovation within capitals and securities market. And when I say innovation within capitals and securities market, what are the areas that we are looking into? So these are the four major verticals that we are looking into when it comes to capital market innovation. First is investor protection and ease of investing. The second is securities markets development. The third is market regulations, and the fourth is integration within financial ecosystems. Uh, and yeah, with respect to the prizes, there are prizes, cash money worth up to 5 lakh rupees up for grab for all the applicants. We have already received 2,300 plus registrations for this program, but yes, we would still love to have your ideas and see how they can be used for innovation within the capital markets. And yes, when I talk about takeaways, there are limited edition goodies as well as participation certificates for all the participants who complete their applications. With that, in terms of the timelines, we are already very close to the deadline. We are closing the applications on 14th of May, and I would request all the participants to go and submit your ideas on Devfolio. The link is devfolio.manthan.co. You should also have it on the chat window below. And make sure that your ideas are relevant around securities and capital markets. Submit your detailed video walkthrough about your ideas. Talk about how you are approaching it. We also recently hosted an Ask Me Anything session last Thursday to solve all your questions, all the participants' questions. We plan to also host another Ask Me Anything session as well next week. So you will receive the details in your email as well. So make sure you attend that, ask your questions, get your queries solved, and come and submit your ideas which are focused around capital and securities market innovation. Uh, with that, just to briefly run about who should apply for this program. So anyone and everyone who has relevant ideas around this segment should come and apply. Be it startup founders, finance enthusiasts, management candidates, professionals, or students. If you have an innovative idea, we would love to talk to you. We would love to interact with you and see your detailed video walkthrough of your idea. And with that, without further ado, what I'll do is I'd like to welcome our first speaker for the day, Mr. Nilesh Shah, who is the managing director of Kotak Mutual Fund. He has over 30 years of experience in capital markets, having worked with ICICI Group, Axis Bank Group, Franklin Templeton. He has been part of the teams that received the Best Fund House of the Year award by Franklin Templeton, ICICI Prudential, and also at Kotak Mutual Fund. Mr. Nilesh is a board member of AMFI, a member of SEBI's COBO SAC committee, and a part-time member of the Economic Advisory Council to the Prime Minister. With that, I would like to welcome Mr. Nilesh Shah to talk about how do we enhance the product innovation in the Indian capital market. Welcome to the forum, Mr. Nilesh.
Thank you, Sumit. Very good morning to everyone. If a country has to grow, it has to make investments. No country in the world has grown without making investments. If you want to make investments, you require capital. Capital can come from domestic investors, or capital can come from global investors. If global investors will take the risk, they will also take the benefits. So clearly, it is important for us that domestic capital is or moved for domestic investments in order to create faster growth, in order to lift Indians from poverty. Now, by and large, Indians are good savers. Our savings rate have run anywhere between 25% to 35% for decades. So savings is not necessarily an issue for Indians. Our challenge is investments. We have been by and large investing in real estate and gold. We don't mind a gram of gold, and that's constant outflow from India. If we look at gold imports in this year, in this century, in 21 years of this century, we have imported on a net basis gold of about $430 billion. This is more than foreign portfolio investment which we have received. Since we don't mine a gram of gold, all this money has gone from India to other countries. Look at India. On one side, we go to New York, London, Singapore, Dubai to bring capital into India, to request global investors to bring their money and invest in India. And as Indians, we have been sending our money abroad. On a net basis, a poor country like India is exporter of capital rather than recipient of capital. We have given more money to gold sellers than what foreigners have invested in India's capital market in 21 years of this century. And before that, the case was no different. Clearly, a poor country like India cannot afford to let go its capital. In some sense, we are like a patient at hospital whose health is not good and yet insist on giving blood donation rather than receiving blood donation. This is where innovation of financial product comes into play. If I look at 1990, Indian capital market was Wild West. No matter what you sold, it was always at the lowest price of the day. And no matter what you bought, it was always at the highest price of the day. This was considered as Garo, and it was considered official world. Settlement was on a weekly basis. Payment crisis was part of official jargon. Insider trading was known as company circle buying, selling. Bed delivery was considered normal. There were settlement cycles just for patavat of bed deliveries. In that kind of Wild West, obviously, investors were taking equity markets as a gamble rather than long-term investment. People invested in good as well as bad companies from a short-term point of view, rather than thinking as a partnership with Tatas, Birlas, and Ambanis, the best entrepreneurs of India. Since SEBI's incorporation, SEBI has tamed this Wild West and created a financial market, a capital market, which is comparable with the best in the world. Today, no matter what you buy or sell, the best price execution is guaranteed. Payment crisis has disappeared. Bed delivery settlement has disappeared. All this thing has resulted into our financial market today being at par with the world. Now, there are more than 8 crore demat account holders. They have been benefiting by investing for long-term growth story of India. There are more than 3 crore investors in mutual funds. Today, when we look at mutual fund investors, whenever there is market correction, we are receiving net flows. In March 20 and April 20, FPI sold 69,000 crore worth of equity and domestic investors bought. Between October 21 to April 22, they have sold 1,65,000 crore of equity and domestic investors have again bought. All this is possible because SEBI has created financial market, capital market infrastructure, which is at par with the best in the world. Now, our challenge is that how do I take this market from India to Bharat? How do I take this to Ravi in Mumbai? This is necessary because bottom of the pyramid requires higher return on their investment. They have remained invested in bank fixed deposits. They have been lured into collective investment schemes. They have invested in gold, but they have not participated in the India growth story. Let me also talk about another concern about our investment pattern. I did some Google searches on collective investment scheme. In 21 years of this century, based on preliminary Google searches on newspaper report about frauds in collective investment schemes, I found that even on a moderated basis, about 1.5 crore Indians have lost more than 1,80,000 crore in collective investment schemes. From Nirmal Singh Bhangu's PSCL to City Limousine to variety of other collective investment schemes, investors have lost money. This money have been lost right at the bottom of the pyramid. These people who could not have afforded losing money have lost their entire capital. They were lured by promise of higher return, and that resulted into greed taking over rationality. There's no regulatory aspect on collective investment scheme. Collection agents are in a Ponzi pyramid. They go and promise the moon, and then they disappear with the capital. Between gold and collective investment scheme, bottom of the pyramid investors have been losing out. We need to ensure that this set of people come into India's capital market, participate in the growth story, and they get good return on their investments. This is also important from the fact that we would love India's ownership of equity remain with Indians. Sometime back, about 22% of India's equity ownership was with foreign institutional investors. Fortunately, with recent selling and aggressive buying by domestic investors, that number has come down to 19%. Clearly, we need foreign capital, but we would love to have our domestic capital also participate in the growth story of India. How do we bridge this gap where there is a vibrant, well-regulated capital market which allows common men to partner with Tata's, Birla's, Ambani's, Mahindras, of the best entrepreneurs of India, vis-a-vis someone who is going and investing in gold, vis-a-vis someone who is getting lured by greed of collective investment scheme. I believe this is possible through innovation in financial product. SEBI has always encouraged innovation. There is an open door policy at SEBI for giving ideas. And even this Manthan is a step in that direction. Clearly, when we go to collective investment scheme investors, these are the people who will wait outside a branch of a nationalized bank rather than go inside as a customer. They'll all go one by one into those branches. They are intimidated by jargons. For example, in mutual funds, we publish most of our communication in English. Many of the investors at the bottom of the pyramid will prefer local language communication. We attempted making communication in local languages, but then the words which carry big jargon does not connect with the local investors. How do we create a chain of distributor which can reach out to this bottom of the pyramid, convert our English communication or jargon loaded local language communication to the language which is understood by the common man on the street? These people are pulled into the investment, not pushed into the investment. How do I ensure that these investors are aware of the ups and downs of the market? In mutual funds, we do daily mark to market of our portfolios. While on a longer term basis, we deliver great performances, in the shorter term, it is roller coaster ride. These people are used to promised return, guaranteed return. These people are used to slowly increasing NAV. They can't take volatility in the performance. How do we create a chain of distributor which reaches out to these people and give them financial knowledge, give them financial information that this volatility is something which is part and parcel of life? accept the volatility, be a long-term investor, and you won't have to worry about short-term volatility over a period of time. Clearly, the way I'm communicating with my existing investors, the way I have imparted financial knowledge to them is not going to work when I engage with the bottom of the pyramid. At MFI, we have come out with Mutual Fund Sahi Hai campaign. This was also blessed by SEBI's initiative. When we first communicated Mutual Fund Sahi Hai to investors, probably it was more targeted towards Bharat. It was more targeted towards middle class. Then we realized that we need to get traction for Mutual Fund Sahi Hai by icons. And that's where SEBI allowed us to engage with sport icons like Mahendra Singh Dhoni, like Sachin Tendulkar. That has helped us in expanding our investor base from 1 crore to 3 crore. But we have to go to 30 crore. We have expanded base in India and Bharat, but that is more in upper middle class, lower middle class HNIs. We need to go to bottom of the pyramid. I'm sure SEBI will think in a lot of ways along with we will experiment, we will fail, we will again experiment, and we'll figure out a way to reach to the bottom of the pyramid in both India and Bharat. We will ensure that they don't get lured by promises of collective investment. They don't end up in a situation where greed overtakes rationality and they end up losing their entire capital. It's far better to suffer short-term volatility and mark-to-market and stay invested over longer term with financial knowledge in order to create wealth for yourself. The second thing is related to gold. Now, gold investment is driven by many things. There is centuries of tradition where every family wants to have gold for their daughters and daughter-in-law. There is also black associated with gold. There's also geographic diversification for Indian gold because that gives you exposure to dollar assets. Before RBI permitted offshore and offer offshore investment products to India, it was the available for of Indians dollar exposure, since which is contributing to gold among Indians. How do we ensure that gold moves up from preferred investment to financial investments? Now, first thing which is if you want to buy a gold product, a gold jewelry, you just walk in a jeweler shop, give the money, buy the gold, and move on. Now, when now hallmarking, hopefully, no worries. But earlier in the previous times, you never knew what you buy. You could have got 22 carat for the price of 24 carat, or you could have got even 16 carat for the price of 24 carat. Thanks to hallmarking, hopefully those issues are this. Number two is related to 3 point. Many times when gold in smaller denomination, transaction costs are 25, 30, 40%. In mutual funds, transaction costs are less than 0.5%, 1%. Clearly, despite having issues on quality, despite having issues on transaction cost, gold continues to remain preferred investment for majority of Indians, especially at bulk at the bottom of the pyramid. How do we bring them into financial market? Again, since gold is driven by multiple factors, we will have to create ways in which this craze can be reduced. This session, one will be ease of doing investment. Today, thanks to Aadhaar KYC, thanks to KRC, KRA, we have ensured that ease of doing investment is there. However, we need to take it to next level. We need to ensure that, like insurance industry, can take banking as the base for investments in capital markets. We need to think of various ways in which buying of financial products like stock, mutual fund, like insurance policy becomes as easy as buying of gold. The second thing will be related to financial education. Mutual fund Sahi Hai is the step in the right direction. Both PSC and NSC also carries out various investor education initiatives. How do we ensure that this investor education initiative goes to every nook corner of India? How do we ensure that it gets related by bottom of the pyramid? How do we move from English communication to vernacular communication? How do we ensure that our communication is in common man's language rather than in jargon loaded languages and communication? All those things will result into financial awareness, financial education, and that will result into, and 20 lakh agents is covering nook and corner of India. Compared to them in capital market, mutual funds, the agent base is probably 2.5, not more than that. How do we incentivize this agents, this distributors, this advisors to reach out to common men? How do we ensure that a person who is servicing a 1,000 rupee investor, 5,000 rupee investor is also remunerated? This is a big challenge. When you service HNI for 5 crore, 10 crore, 15 crore, your servicing cost, your...
Hi, Mr. Nilesh. Sumit this side. Apologies for interjecting you in between.
Yeah.
I think there is some sort of a bandwidth issue. So I would request if you can just stop your video and talk it out. That will save a little bit of bandwidth because the audio and video are getting lag. You can continue then. Thank you.
Okay. Thanks, Sumit. Apology for this bandwidth issue. It continues to remain a problem everywhere. When you are servicing high net worth individual, then clearly there is a huge incentive because your remuneration of selling a financial product kind of justifies the service cost. When you're dealing with 1,000 rupee investor, 2,000 rupee investor, you'll have to put in more efforts first in educating him and then in second servicing them. How do we create a model where it is remunerative for an agent, advisor, distributor to service bottom of the pyramid? By doing this multiple approaches, we will be able to create a base, a model what the pyramid can participate in financial products investment. Let me now talk about a financial innovation which is possible, which can bring people from gold into financial investment. Today, in the international market, there are gold futures, there are gold options. Today, interest rates have started rising again. Because of rising interest rate, it is possible that we can launch a fund where a large part of money is invested in government securities and other interest-bearing securities, and a small portion is used for buying gold options. When you buy option, it gives you full participation on the upside, but it does not give you any downside participation. Combination of gold option along with interest-bearing portfolio can create a return profile where if gold prices goes up, you get full participation and your returns will mimic gold price behavior. However, in case gold prices goes down, since options do not have to participate on the way down, your return profile will be capital protection. If gold price go down, you don't participate in the downside. And if gold prices go up, you take full benefit. This kind of structuring is possible using gold options and gold futures in international market. Now, imagine if I can go to person who are investing in gold, saying that when you buy physical gold, your transaction cost could be between 2% to 40%, depending upon quantity of gold you buy. You have to worry about safekeeping. And more importantly, if gold prices go down, you lose money. And if gold prices go up, you make money. Now, here is a financial product which gives you upside if gold prices move up. But in case gold prices go down, there will be no downside to you. Your capital is protected. And more importantly, the transaction cost of entering into this fund is virtually zero. There will be some asset management or total expense ratio charged. But compared to the gold's transaction cost, it will be far lower, and it will be distributed over the life of the asset rather than at the upfront. This kind of approach, this kind of communication, this kind of product may help us in luring people from investing in physical gold to investing in gold structured notes, gold structured mutual fund units. Of course, we'll have to still send some money for buying of gold options and futures, but we can even create that market in India. Through this kind of financial innovation, we will be able to reduce India's output of gold. And hopefully, once Indians become more familiar with mutual funds and financial products, they will start shifting their savings from gold into financial product. This kind of financial innovation will help us in managing India's savings allocation towards gold, towards products like collective investment scheme. The third thing which we need to focus on is India's investment towards physical asset like real estate. Every Indian needs a home. Undoubtedly, that is what we have to work towards. But there are many Indians who have invested in real estate from a speculative point of view. They are not necessarily investing in those products from staying point of view or renting point of view, but it is unnecessarily speculation in land, in the underdeveloped properties, and so on and so forth. Previously, because there was no regulation on real estate buyers, there was no protection of real estate buyers like SEBI protects capital market investors. The entire real estate sector was in complete mess. Developers were taking consumers for granted, and it was becoming a cozy club of large investors, large home buyers. With the introduction of RERA, consumer interest and developer interest is aligned. But despite introduction of RERA, we have seen Indians investing a large portion of their wealth in real estate. A lot of it is for the purchase of house, which is absolutely needed. But some portion of this is in speculative mode for land buying, for underdevelopment property buying. Now, is there a way we can create real estate related products in capital markets so that people don't have to invest in real estate per se? They can get the same benefit by investing capital market products related to real estate. SEBI has already launched REIT and InvIT. This gives exposure to real estate sector, to fractionalized ownership of real estate on residential as well as commercial property to investors. Now, the same thing can be replicated probably in mutual fund. Today, we are allowed to invest 10% of our fund AUM in debt fund, in real estate units. Can we think of launching a mutual fund scheme where 100% of investment is in REIT? That way, we will be able to anchor REIT investments. We will be able to participate in asset monetization program of the government, which will be more InvIT in nature. And we will be able to provide returns linked to the real estate and infrastructure projects to our investors. These returns will be independent of fixed income market. They will be hybrid in nature. They will, in all probability, over a longer period of time, give better return than fixed income and lower volatility than equity. This can again lure many investors from fixed income products into capital market products. Innovation like REIT, InvIT, mutual funds investing into REIT, InvIT, put together can again take substantial portion of Indian savings and channelize it towards investment in financial market product. As they say, innovation is a journey. It's not a destination. SEBI cannot rest on its laurels of changing India's capital market. It will have to continuously push industry and create regulation to ensure that we are at par with the best in the world. We are able to create multi-layers of risk and return to suit the appetite of investors. There is no free lunch in world. If you take risk, you generate return. If you don't want risk, your returns will have to be lowered. But by creating structured products whereby risk and returns are layered, whereby risk and returns are categorized, we can lure a lot of savings, which is today resting in bank deposits, in gold, in speculative real estate transaction, into capital market. This will help India's entrepreneurs. This will help India's entrepreneur raise domestic capital rather than depend upon global capital. Thanks to SEBI and mutual fund industry, today we have been able to stand against foreign portfolio investors. In the 2008 crisis, foreign portfolio investors had sold about $20 billion of equities, and our markets had corrected from 21,000 to 8,000 Sensex. Today, foreign portfolio investors have sold about $23 billion of equity, and our markets are down from about 18,500 Nifty to 16,500 Nifty. This is all possible because of domestic investor base. The domestic investor base has given stability in equity market. Now, how do we ensure that domestic savings overtakes foreign savings in segments of supporting India's entrepreneurship? Now, let me make one final point. Today, startups and venture capital and private equity funds have created 100 unicorns in India. It is third highest in the world after US and China. The unicorns are creating disruptions, they are bringing innovations, and they have created a huge level of growth. In FY22, listed companies put together, including Tata's, Birla's, Ambani's, Mahindra's, Adani's, and PSUs like HP, BP, IOC, put together have invested $75 billion in fixed assets. The gross inflow in private equity and venture capital fund this year is about $70 billion. On one side, large industrial groups, including PSUs. On other side, startups and private equity funded ventures. They have collectively contributed almost similar amount towards India's growth. Now, clearly, we all know the beneficial impact of startups on growth, on entrepreneurship. The sad part is that about 80% of this startup money is coming from global investors. Indian investors have participated to a very, very low extent in startup and private equity and venture capital. There are many Indian managers who are running excellent PE and VC funds, but unfortunately, they don't have access to domestic capital as it should be. It's a new concept. It's growing slowly and steadily over a period of time. There are many angel networks which allow Indian investors to participate in the growth story. But clearly, when 80% of the AUM is dominated by global investors, we need to pick up the pace. We need to ensure that Indians participate in Startup India story as much as global investors are participating. Again, this will require financial innovation. Again, this will require retailization of Indian PE and VC industry. SEBI has already taken several steps on AIF. How do we popularize this among investors? How do we ensure that AIF goes to retail investors also rather than just qualified investors? There are multiple ways in which we will be able to channelize savings from Indians towards startups, towards fintechs, towards PE and VC in India. Now, one must appreciate that this is higher risk, higher return product. There should not be mis-selling. There should not be miscommunication. Otherwise, instead of taking the benefits of domestic capital enter into PE and VC, we may end up scaring that domestic capital away. So we have to balance between appropriate selling, right selling, vis-a-vis the need to channelize domestic savings into PE VC fund. I'm sure SEBI will be able to work with industry, guide industry towards creating appropriate communication, appropriate products, so that Indian savings can be channelized towards Indian entrepreneurship. The Tatas, Birlas, Ambanis, Adanis, as well as the Baijus of the world, Zerodhas of the world, will be able to raise domestic capital and create growth for India. Indians, instead of investing in gold, will also invest in golden sons and daughters of India and help them support, create growth in India. This is all possible thanks to the leadership provided by SEBI in terms of open doors for financial innovation. Innovation is a journey, it's not a destination. What we did yesterday is not good for today, and what we will do today will not be good for tomorrow. We will be always on our toes to copy the best, to be at par with the best in the world, and hopefully through combined efforts of market participants and regulator, we will create as innovative financial market as it exists in Western world. Thank you so much. We'll be happy to take questions.
Great. Thank you so much, Mr. Nilesh, for those amazing insights. It was quite an interesting conversation when you talk about product innovation for a specific audience, let's say, which is called Bharat for India. And when I talk about like innovations, those are some really interesting points from a like opening up REITs or opening up even like Bharat for capital markets, or even like opening up the the startups and the VC ecosystem for a retail market. So those are for some quite some interesting ideas, and I think like listening through your talk itself, I think applicants can come up with the right set of ideas for this program as well. And with that, I have already have a couple of questions from the audience side. Let me take a few of them. I have one specific question from Mr. Rakesh, and Rakesh asks that is there an opportunity for safe investment inclusion? How can technology enable making small investments safely, as simple as making a payment for UPI?
Return to it. I think safe investment is informed investment. If I tell you that if you jump from 10th floor, you will injure yourself, and still you jump, then it is an informed decision. You accepted injury. I don't think so. We should try to misguide investors by saying that please come into mutual fund, always make money. You'll have to be aware of the risk. The risk and return go together. There's no instrument in the world which only gives you return and no risk. I talked about gold options, which gives you participation in life and downside protection. But that instrument is possible only when certain circumstances on interest rates are met. In most cases, the upside participation in gold will be kept. Maybe you will get 80% participation, 90% participation, but not necessarily 100% participation. So an informed investment is a safe investment. In March 20, SIP returns had become negative for 3 and 5 years. Many investors who were informed didn't got deterred or panicked. They continued their SIP investments. Today, they are sitting on 15% return, 20% return, 25% return. Unfortunately, there were some investors who got panicked by negative return. I gave money to Nilesh Bhai for 5 years, and after 5 years, he's giving me negative return. It does create panic. They were not educated enough. They were not informed enough. They were not handheld by distributors. We couldn't reach out to them in the dark days of COVID. They ended up redeeming. They converted their actual notional loss into actual loss. So to me, safe investment is informed investment. As long as you know the risk and return together, it will give you ability to ride over the volatile period, the downturn, and wait for the good days to come where your returns will be decent enough.
That was quite an interesting point that you put forward. And when we talk about investor education as a specific vertical, I think SEBI is already doing so much in terms of educating investors and giving out the right set of messaging towards making sure the investors manage their risk, as well as they understand the products what they are investing into. And I think that itself is a like larger theme for this program as well, in terms of investor education and protection of investors, retail investors money. And those were some quite interesting points that you put forward. With that, I'll quickly take maybe like a couple of more questions as well. So I think so that there are two questions that I'll try and club together. So which is by Satish and Anirudh. So Satish asked that there is they have heard about like gold options in the international markets. So if you can elaborate a little bit about gold options in international markets, followed by what are the new financial instruments that are being innovated upon at the current moment.
So gold options in international markets are nothing but options on any part of the world. You up the premium. And in case asset value starts going up, you start participating in the upside. When you buy gold physically, you take full upside and downside risk. When you buy gold option, you have kept up full upside participation after the premium cost and downside protection. Now, creates peculiar risk return profile. You shift the downside risk lure of premium to the option. We can we can take advantage of low interest rates globally, whereby priced much cheaper market than and give you almost 100. Obviously, the instruments to in
Uh, I think so that there was I think there was some specific internet issues, but what I'll do is let me quickly, by the time Mr. Nilesh tries and rejoins, I'll quickly share my screen so that all the attendees can quickly mark their attendance for this session. The reason we are taking this is so that we can send you out the participation certification for attending the masterclass. So how to do that is either like so pick up your phones and scan the QR code that is there right now in front of your screen, or else the second option is click the link in the chat window. With that, I'll also I'll quickly see that I see there a specific question by Mr. Siddharth, and he asked that how one learned person will associate with SEBI to spread awareness session on stock market. So there is a specific resource program initiative for which we already put out a link of it on the chat window below. So you can like go through it, and you can also, if you have any specific questions, you can reach out to us on the same email ID itself, and we will get back to you and answer all your questions around that. And yeah, I think so. There, I don't see Mr. Nilesh joining in back once again. Uh, with that, what I'll do is I don't want to take much time, and I would love to move ahead with the agenda. And I would like to invite our next set of panelists for this in like for the next set of panelists on the panel discussion on account aggregator ecosystem, opening up new avenues for capital markets. So again, account aggregator as a initiative is quite talked upon. We recently celebrated that SEBI as well joined the account aggregator ecosystem itself. Again, that itself is going to enable access to all sorts of ecosystems, all sorts of financial products under one roof itself by retail markets. With that, we have a couple of we have interesting panelists joining us today, starting with Mr. Srinivas Jain, who is the executive director at SBI Mutual Fund. Mr. Srinivas Srinivas has over 28 years of experience in financial services. Mr. Srinivas is currently the ED and Chief of Strategy for SBI Mutual Funds, and he had joined this organization in 2000, back in 2001. He's overall responsible for strategy, global business development, and superheads sustainability, digital technology, and initiatives for the organization. Mr. Srinivas is also known for his investment management industry knowledge as well and networking skills. He is an active contributor to many events in personal finance, sustainable investing, fintech, and indexing. Welcome to the forum, Mr. Srinivas. And
thank you very much. Happy to be here.
Thank you. With that, I'd like to introduce our next panelist, Mr. Anuj Kumar, who is the Managing Director of CAMS Limited. Mr. Anuj has over 3 decades of experience with premier organizations in the country, including Godrej Appliances, ICICI Group, IBM India, and currently he is with CAMS, India's premium service partner to the asset management industry. Joining CAMS as CEO in 2016, he has saw a rapid ascent and took charge as the President and CEO within a span of 2 years. And he is presently the managing director. Welcome to the forum, Mr. Anuj.
Hi, good morning. I'm very happy to be in this panel. Thank you.
Thank you. I would like to also welcome Mr. Deepak Shenoy, who is the founder and CEO of Capitalmind. Mr. Deepak is the CEO of, as I mentioned, is a CEO of Capitalmind, a SEBI registered portfolio manager with over 700 crores in AUM and over 2,000 crores in AUA. Mr. Deepak loves to write and decode complexity of finance, money, and investing. His viewpoints appear regularly in leading financial media and business television. He is also author of the book Money Wise. And again, I also love to read Mr. Deepak's view around finance and money on his couple of media articles that he already writes about. Welcome to the forum, Mr. Deepak.
Thank you very much. I'm very happy to be here.
Great. We also have Mr. Nithin Kamath, who is the founder and CEO of Zerodha. Mr. Nithin bootstrapped and founded Zerodha back in 2010 to overcome the hurdles he faced during his decade-long stint as a trader. With 9 million plus customers, Zerodha is the largest stockbroker in India today. A tech-first company now, Zerodha offers innovative trading and investing solutions that appeal to a wide range of audience in a bid to reach to those sections of the society that have stayed away from the capital market so far. Mr. Nithin also started Rain Matter, an R&D fintech incubator fund that has partnered with some of the best investment tech startups in India. More recently, Mr. Nithin also set up Rain Matter Climate Foundation as well, an Indian climate fund providing funding to startups and at grassroots organizations working on solutions to mitigate climate change. Outside of work, Mr. Nithin also enjoys playing guitar, poker, basketball, and swimming. Welcome to the forum, Mr. Nithin.
Yeah, thanks a lot for having me on this.
Great. With that, I would like to hand over the mic to Mr. Srinivas to take ahead with the panel discussion.
Yeah, thank you, and good morning to all of you. Thank you for that very kind introductions to all our panelists here. So let me start by thanking SEBI for coming up with this fantastic Manthan Ideathon initiative. And I managed to see quite a few sessions in the last few days, and it's big learning for me on various interesting initiatives that have been talked about. One such interesting initiative is the account aggregator system. And today's topic is about AI ecosystem, opening up new avenues of capital markets. Interestingly, last week we heard Nandan and Suresh Fireside chat about giving control to citizens, their data, and how that will unleash the new set of growth in the overall financial markets. Today, we plan to go a little more deep dive into this and talk to serious participants, SEBI market participants. So we have one of the largest brokerages in India. We have a very large financial planner ecostructure with Deepak and his team. And of course, we have the backbone infrastructure that's being provided to the entire industry, which is Anuj from CAMS. So thank you very much again for joining this panel. I myself am part of this AA initiative as part of Sahamati Governance Council, so I'm happy to be talking more about this. Very quick primer on account aggregator. I know we've talked a lot about it, but this people continue to ask me, what is account aggregator? The inside joke is, I hope it's not alcohol anonymous as people talk about, but that's not. So here is what I wanted to give you a big primer on how revolutionary this whole concept is. So, we've been building various large initiatives as India. These initiatives have been coming up. The two big initiatives, which all of us have already seen, is building up of the layer of identity with Aadhaar, eKYC, and then eventually eSign. We've been embarking on building digital identity for the entire country. Another big initiative that helped both capital markets and of course the market at whole was building the entire payment ecosystem with UPI, Aadhaar payment bridge, and AEPS. Right? So according to me, the next big thing is data empowerment. And data empowerment is going to come with three big key changes. One is the artifact around it, the DigiLocker system that we've built from data sharing point of view. And now the new baby, the stuff is the account aggregator platform. Basically, the account aggregator platform facilitates the consent sharing of financial information in real time from building consent managers, the so-called AA, which is a bridge between the financial information providers like banks, mutual funds, insurance companies, and others, and financial information users. And they could be many, many users, fintechs, startups, even the banks and others who could use this. All doing this through a trusted architecture and through a properly user-consented setup. So this is the primer around the account aggregator system. Good news, again, we heard last week, SEBI chairman's eagerness to bring the account aggregator system to the capital markets. All the regulators are now on board, and we would now see interportability of data between all these regulated entities across insurance, banking, financial services, and capital market architecture. I'm going to pause here and start off with our panelists today. Maybe since Nithin was introduced last, it's a good idea to go first with Nithin. Just to get a sense of, Nithin, what do you think the AA, especially for the security market, and how would that make consumer more accessible to, or what we call as democratization of data access to consumers or investors in the capital market? So what are your initial thoughts on that?
Thanks, Srinivas. Firstly, I want to reiterate the importance of the India stack in our growth, not just our growth, entire ecosystem, because, if not for eKYC or, online sign up, or if not for UPI, which enabled us to actually, offer IPO offerings to our customers, I don't think our business would be even 1/10 of what we are today. So, it's just enabled someone like us who can be digitally, can be completely, digital, and then lower the cost and offer it to customers. Now the issue though, right, as a business, it is something that we've been talking. When we started the business in 2010, really what we were trying to solve for is, how do we make our customers do, customers do better with their money, right? As in, now we've offered great platforms, we made it easy. We've given access to all kinds of information, we've given access to education and everything. But does it really mean that people are doing better with their money is a question that we ask internally. And the answer is no. I mean, while the platforms have gotten slicker, you can do everything, but it doesn't really mean that people are doing better with the money. And the more we've thought about it, the more we've realized is, to be able to help people do better with their money, we have to advise in some form, right? Because none of us are really thought about finance in school and colleges. We pick up habits on the fly. We learn what our friends are doing, and most of the times it's really bad habits. So I think what India really needs is an advisory first ecosystem, because today it's not. It's today it's people do what they want to do. Everyone's in their own social media bubbles. They get influenced by whoever they're following and do what they're doing. So now the problem with creating an advisory first ecosystem is to be able to get access to customer data, right? As in, our customer has a trading and demat account with us, so we get access to view some of his holdings with us, right? But we don't really know what is his financial status. Does he have PF? Does he have, what's his bank account balance? What is his, right? Because for you to be able to advise holistically, you'll have to get access to all of this information, right? And the problem in today's cluttered world is that people are very distracted, right? If you come on my platform and I ask you 20 questions to fill up, you're going to drop off in 2 minutes. I mean, it's not a scalable business. Of course, you can build it. You can have a relationship manager, go meet HNIs and do it. But can you digitally build a scaled up advisory model? At very low pricing point? It's almost impossible today because people won't stick through giving the data that you require to be able to offer decent advice. So, and this is something that we were hoping for a long time, that the capital markets get on it, right? Because the banks are slowly and steadily, all of them are getting on board. I was just I mean, insurance is going to get on board. So so if say our customer comes on our platform and he consents for us to see the data, and we are able to collate all of this data, then I think we can digitally offer a decent advisory solution, right? And the way we have thought about this is that when it comes to money, people want to talk to someone before they transact. It isn't buying something on Zomato or Swiggy, right? As in where a push notification will do the trick, right? When it comes to money, and I mean, if it's not a 500 rupee SIP, but it's a sizable amount which makes a material difference, people want to talk to someone before they do anything, right? And if they're not able to talk to anyone, what they do is they go to inactivity. I mean, they just put the money in bank to fixed deposits or gold or whatever. So I think there is an opportunity here to kind of create an advisory ecosystem which is advisor first, but advisor first who's only going to charge an advisory fee, so there's no conflict of interest. Now, if he charges only advisory fees, an advisor should be able to offer advice at scale levels. I mean, advisor should be able to manage 200, 300 customers at least, which can happen if he's leveraging technology, and he can leverage technology only once that whatever the platform has access to data, right? And so I think I'm very excited. I mean, I'm very excited because I think it can solve for the larger problem that I think all of us are trying to solve for, which is to help people do better with their money.
Yeah, it's interesting you say that, Nithin. I think beyond doing the high net worth market, I think bringing it to the masses with the technology scale, the infrastructure that you build, and do it at a scale that everybody gets benefit of the advice is a very interesting thought that you bring in. But I want to again go back to see how this can be done, right? So maybe Anuj, you may want to pitch in and say how on the you are the largest provider of data for the industry. You manage the data for the entire mutual fund, largely for the mutual fund industry. Operationally, how do you think, Anuj, this AA architecture will bring maybe better efficiency, especially in providers like us and users like Nithin and Deepak, in the industry? How do you think this will get rolled out, and what are the efficiencies that will come out?
Sure, Srinivas. So let me just take you a bit into the past. I think the mutual fund industry, and I'm just focusing on a segment to illustrate what happened here, which did not happen in other places, was ahead of its times. So we created what is called a CAS, and then we created what is called an all RTA CAS. By the way, it should be called an all MF CAS, because if you had holdings across the board in 20 mutual funds, the records were actually stored across RTAs, across mutual funds. You could find a common key. You could find a common key like your PAN number or your email ID or a combination, and then come to a website and ask for the information. And this has been going on for over a decade now. I mean, unprecedented at that time. And while I don't want to use the platform to promote ourselves, but I must say the thinking was ahead of its times, and consumers did take advantage of it. That's where it began. Over a period of time, and as part of the sandbox itself, there was a next set of innovations. Because in the first format, I as a consumer could get the CAS, but it would only come to my email box. There was no way for me to get it to an advisor. And therefore, there were drop-offs at both levels. If an advisor had 1,000 customers, he went and urged all of them to pull the account statement. Maybe 500 pulled, the others did not. And of the 500 who pulled, 200 forwarded it to the advisor. And therefore, it was a suboptimal process, did not serve the full purpose. But a very elegant design, I must say. Through a set of APIs, we allowed the consumer, this has not been productized yet, but exists, was developed as part of the sandbox. The consumer could come to a fintech website, and now he could access or ask us that he wanted to access the same information across mutual funds. we would send OTPs out so that he could authenticate himself and say, now I don't want the statement to come to my bank account. I want it to come to this website or this provider, and it would go there. So that was thinking ahead of its times, did very well. However, it is still not the whole 9 yards, which means you can't still do everything that you want to do. For example, you cannot give a perpetual consent. You can't give it for the next 60 months. You can't give it for the next 12 weeks. You got to initiate the process and close the process at every instance. And like Nithin said, I would completely agree. Attention spans are 30 seconds, 1 minute. And I don't want to blame the millennials. I think I behave the same myself. That if something takes perhaps more than a minute, I start getting queasy and think, do I really want to do it? So perpetual consents, I think, is a big axis which will kind of democratize the whole thing. And then this specific innovation was the casing was just restricted to mutual funds. But if you look at broader statementing, all of that across banks, insurance, so you can actually get a 360-degree view of my financial holdings. And if I want to, let's say, send it to Deepak because he's an advisor, that would be possible. If Deepak's firm or the firm could argue that, look, I would like this to be refreshed every week because, look, you seem to get dividend and interest income every third morning, and we've got to make a decision on how to deploy that money, and we're doing a suboptimal job, we could do all of that. So that's part one. Part two, if you just go a little away and go to lending, for example, today what happens in lending, despite all the digitization, a lot of the banks that I know have in their regional offices, like not dozens of people, but perhaps hundreds of people, taking bank statements, porting them into Excel, and then running their own algos. A lot of that has become industrialized. A part of that process still remains bespoke. Those printouts, those scanned images aren't secure, aren't safe. And we all know that there is a process because sometimes it comes from the sourcing agency. It is never consumer to the bank directly. There is intermediation involved, and there is only a level of security that you can impose there. But with the democratization of this consent-based architecture, all of that can go away over a period of time. It will take some time. It will take a cycle. But then you can deselect every other way of accessing that information, say it is completely secure. There is a full ironcladding around this architecture on what AAs can do, what TSPs can do, and what the FIU can do. The purging methodology, the storing methodology are all stated. The security testing is completely well defined. And then I think a third layer of innovation may exist where a lender may say that, look, if you let me monitor you for the next 7 years for which you're taking a loan, I may incentivize you. I may say that I offer discounted rates to you because you're allowing me that access. Because today that is frozen in time. You get to the consumer today. And if you talk to lenders, I mean, digital and non-digital both, their version is that once a consumer has got the money in the bank, he's not really motivated to pick up your phone call. And he's not going to talk to you about whether he changed residence or changed jobs or any of those things. So a lot of intelligence will come into the overall system, both capital markets and non-capital markets. And therefore, starting from the baby steps of the CAS, I think this will go now through many, many layers of innovation and make sure that safe, secure data with complete accountability at every level and every participant of this ecosystem will get established. And therefore, it looks completely revolutionary to me. And that's the reason we are very excited.
Yeah, thanks, Anuj. I think it's interesting to see how we are evolving from the age where we used to scrap data, take password from customers to build that profile of investors to now a consented architecture layer. And it's very interesting to hear about the 3 layers of innovation that you talked about. Deepak, now to you. I remember talking to you, I think recently, and you said AI could be something like the GPS for the industry. It just got me thinking and said, I remember you telling me, we don't know what all innovations can come, but a whole lot can come once the GPS is kind of put in place. And, today we are talking about risk profiling, 360-degree data. From your perspective, what are the stuff that for you as a practitioner and also for the industry that the AI architecture would kind of help?
Thanks, Srini. I think it's quite an interesting thing because if you look at what an account aggregator system does, it allows you to give what I like to call revocable consent, which means I can tell you that you can access my data, and then I can stop you from accessing it whenever I want. A very powerful tool. And if I looked at, for instance, in mobile phones were typically used for calling people. Once they added the GPS functionality, everybody could track where they were. They could track where somebody else is. Look at the innovations that came on top of it. The Uber and Ola concept was you could book a cab, find out when the cab is coming to you, find out where you're going in the cab, how long it will take, distances, times. Apart from that, now on a WhatsApp, you can ask someone to share their live location with you. So if you're going to meet them, they can find out, where you are. If you're not geographically in exactly the same place, you can find a way to meet each other. These are innovations. Perhaps the person who designed the GPS didn't think about when they thought about it. So today, I think an account aggregator system is simply saying, listen, I'll give you an ability to share your financial data, profile, balances, transactions with somebody else, or with somebody else for a short period of time, for a continuous period of time, a snapshot every 12, 6 months, 1 week, or whatever it is. This ability now allows people to innovate on top. Now, three ways that I can think of, which are very obvious to me right now. One is the advisory ecosystem, like both Nithin and Anuj said. The idea of the problem is that people, and we advise people, we're a PMS, so typically HNIs, come to us, and we're a fiduciary, we have a fiduciary responsibility. So we are not just selling our products, we have to do the best in the interest of the customer. Sometimes the customer doesn't even know what they own, where and how much, and in which areas. So we can appropriately advise them what kind of exposure they should be taking, debt and equity and so on. So we ask from them, give us your CAM statement. In the CAM statement, we might discover that they had invested in a different email address. Unfortunately, previous practices caused certain advisors to give their own email ID instead of the customer's email ID. So it was a little bit jumbled up, because sometimes it isn't, the statements that you get from a CAMs today were linked by email ID and not by PAN. So we would then have to kind of get data from NSDL or other places and try to bring this together. This is such a mammoth exercise. We have given up on it for the most part because we can't use technology, and none of the formats are easily parsable. Of course, CAMS is, I must say, thanks to Anuj and his team, that they've created a format that is parsable, but most others are not. So bank statements, PDFs, they just send you files which are unreadable. So the advisory system would be phenomenal if you were to just say, listen, tell me what your data is electronically. I could write a program that can then get this data after consent from you, collate this data together and show you a one view of where you are currently. The advisory ecosystem can sit on top of that and in fact use technology itself to provide some basic features saying, listen, you have no equity exposure at all. You have no debt exposure at all. You have exposure only to this kind of, maybe something that's extremely risky and that doesn't seem to fit any other of the financial profile questions we asked you. So maybe you need something more to balance this out. And this can only happen if a lot of financial players share their data together. So it can't be like only two mutual funds share the data. It has to be with all the mutual funds. It has to be all the brokers or all the NSDL and CDSL as depositories share their data. It may be required eventually of all insurance companies to share the data, of banks to share the data, of even the PFRDA and the EPFO to share data. Once you have this ecosystem, there is so much that you can do in the advisory ecosystem, not just from advice, and that is one layer. There's also the transaction monitoring and reporting that can happen. I'll talk about transaction reporting in the sense if I advise a person, I cannot do that transaction for him. The advisory ecosystem is only for advice because people have misused advice as a license to be able to say, I'll transact on your behalf. Usually it has to be advice is taken, and transaction can actually be done separately. But then how does the advisor know that you have acted on the information in the way that you have been requested to or advised to ask on it? This reporting again is a pain because if the customer has to upload that data again, they're like, oh my God, it's just too much work. The life cycle, people don't want to do work. Even I don't want to do work. So I don't want to advise myself if I have to do all this work. So to be fair, I think this will change not only advice, but post-advice monitoring of a person's financial health also. This also is very useful, for instance, for filing taxes. You can give your transaction statements to your CA. You don't want them to see your statements all the year long. It's a one-time snapshot at the end of the year. Give my transaction statements for an access that can be like, this is it, and you don't get access to this. So I don't have to share my login ID and passwords. I can say, can you fetch it electronically? I've given you access for the next 1 hour, and they should be able to take that and do whatever else they want with it. The last bit is, of course, the thing that I think Zerodha has done really well, the concept of nudges. And I think nudges should be part of a financial ecosystem as a whole, not just in one area. If there are things that you need to know, there is technology today that can monitor everything, whether it is if a company is announcing results, to whether some company has defaulted somewhere else, a bond has defaulted or something like that. The idea that a monitoring ecosystem can look at a portfolio and tell you whether there are things that you need to act on, just because you are participating in some product which is perhaps which may not give you that information by itself for whatever reason. This third-party monitoring is actually a very, very interesting concept. I think both organizations and individuals can use this. So as an advisor, I would like to say, if something happens in the financial world, I need to be able to tell customers who have those particular products that this is what is happening. For instance, today you can no longer invest in mutual funds that invest out of the country. Now, each mutual fund has currently sent advisories to all its customers saying, oh, well, you can't, your SIPs are stopped, or, things like that. This is an advisor's job also. I could proactively now find out if I have 1,000 customers or 5,000 customers, automatically move that communication over, and then also tell them when they can restart whenever RBI and SEBI give their permission to do so, that it is time to, start things back again. I think all of this stuff is made super possible. And this is just the initial innovations. Once this comes, earlier your data was your product, right? So people built complicated startup platforms, but they own the data. They owned whatever data that you created, your transactions, your things like that. But now that data is no longer a product that is a moat because anybody can get access to it by using the account aggregator ecosystem, I think we can go much beyond and use this data for purposes that can really be beneficial, from tiny collateralized loans. So maybe crypto has shown us that way. I don't like crypto as a concept, but one of the things they've done is there's certain instant loans that can be, quickly done with collateral as backing. Now, all the mutual funds you have, any bank can lend to it up to 20 lakhs, I think. The problem with that is that you have currently it's a very high cost, high turnaround time system. Even though people like Anuj and his team at CAMS, they've actually set up a whole platform that can be done electronically completely. No bank has currently used this or made it very quickly possible at a very low cost for people to borrow against their funds for a long time. There's a good reason for it. If your funds have an exit load or you have a very high tax incidence for actually selling your money, selling your mutual funds and generating cash, why not just take a short-term loan against it for like 15 days and then return the money, and then you don't have to pay all that tax that happens, So all of these things are made possible by an account aggregator ecosystem. It's not that it's not possible today, but it's the same as, I could tell you without a GPS, why don't you just call me and tell me where you are? I will come to you. That is still possible. It was always possible, but now it's just, they share your location, I'll come there. It's just that much easier. I think account aggregator should enable all of these and more.
Yeah, that's fantastic. There's so many things you packed in that point. So many interesting stuff that you said. A couple of things that you said was on, which kind of struck the chord there was, today, BNPL is a big thing, but you can probably use security-backed short-term lending with an account aggregator platform. I think that's a very interesting use case that you talked about. You also talked about crypto investors, which actually brings me to an interesting conversation. I know crypto investors not just there for ease of doing it, but there is most of them have an expectation of significant up gains in very short period of time. Nithin, that brings to the point saying, the millennials are excited about this frictionless, quick, stuff that they do. And that's probably one of the reasons beyond returns that they go to the crypto market. What do you think? I know your platform has done something amazing in terms of speed, in nudges, all that, insightful stuff that you do. What do you think the account aggregator platform will do for your platform or otherwise to attract more millennials and others when it comes to frictionless, ease of use transactions?
Right. Yeah. No. Firstly, I think most people go to crypto for for greed and nothing, and very few for everything else. So yeah. No. I think, see, the thing is, what is missing in India, right, is that we have a lot of people who have interest, but we also majority of them don't know what to do, right? Because I think there's something that we've tried very hard for a long time, which is to see if we can educate people, and through Varsity, which is probably amongst the top education initiatives on capital markets in the world today. But like I said earlier, right, Varsity is competing at TikTok and Netflix, whatever, right? As in, and it's very tough to, people don't have attention spans, right? As in, they don't last through long. But on the other side, what we've realized with nudges, right? How the nudges play out is when a customer of ours tries to place an order, what we've realized is that at that point of time, we have is undivided attention. It's a few seconds, right? I mean, you've added a stock on your market watch, you press the buy button, and then you confirm, right? For those 2 or 3 seconds, we have undivided attention, right? And what we've realized is that we can actually educate people a lot more in those 2-3 seconds than what we can really educate them through tons of content on Varsity or long format, videos or, emails and etc. And that's really what, is the most exciting about, what we're doing at Nudges, which is slowly and steadily. I mean, see, at the end of the day, to do okay with money, you need to follow 4 or 5 very basic rules, right? As in terms of, diversifying, or in terms of not betting your house on one thing and stuff like that, right? So now the other way to tackle this problem, right? Now the problem with nudges is that we can only nudge when he comes to us for transactions, right? Now, if you do, what Deepak was saying, right? This whole push notification emails, calling a customer, people have no interest. Now, I mean, our open rates on our email is like 3%. I mean, that's open rates. I mean, that's coming from a customer who has a relationship with us, right? I mean, SMS is even less than that, right? I mean, saying if open is that much, I'm guessing people who actually read through what we are sending is maybe less than 1%, So, and so how do you nudge a customer who isn't, that's a problem, right? I think that's a problem for Deepak. It's a problem for us. I mean, it's a much larger problem for us because we don't have relationship directly as such, right? As in, we rely on the platform. So, so the way I'm thinking about this is, right, is that if we can somehow enable a professional advisory ecosystem in this country, like think of, I don't know if it's the right example, but think of as the mat of advisors, in the sense, advisors who are on the other side who are leveraging tech. They can't sell anything they want, they can only sell what the platform allows them to sell, but they're very well educated on these things. So can a Zerodha or a Capitalmind go out and educate a few 10,000 advisors, kill them, ensure there is no conflict on the platform where they can sell anything they want, right? They can only sell what the platform allows them to sell. Then will these guys end up educating the customers is a question, right? Today, like, personally, I think in India, historically, the person selling you the financial product has had a conflict of interest, right? So he had an incentive to confuse you versus educate you, right? Because the more he confused you, the higher the chances of him being able to sell whatever he wants, right? So we need to change the dynamics, right? As in, you want that person who's selling the product or advising that the front line to be actually explaining why he's doing what he's doing, right? It's not possible to educate every customer, right? But assume, say 10,000 advisors are reaching out to 1 million customers, and out of this million, say 10,000 customers now become professional because of this advisory ecosystem. Now you've enabled 10,000, power users of sorts who are gonna go start educating, right? As in, and that's, so eventually this country needs, most of India needs to be backing Indian entrepreneurs, right? I mean, like, we need India to be taking more risk. We need, we can't just be relying on foreign money or allow foreigners to generate all the wealth out of this country, right? As in, and all of that can really happen when India's risk appetite goes up, and it can't go up only because it's a bull market, right? Because in India, the problem is every time there is, like a large bull market, retail comes in and then they go away for many years, right? As in, it's just, it can't happen like that. So, and I think, like Deepak said, it's like a GPS. So I think there'll be a lot of second, third of order kind of effects of allowing a tech platform like this, allowing a technology like this to exist, because, there are, over the last 2 or 3 weeks, from the time that tweet was shared saying, SEBI is going to do this AA thing, I've been trying to enable this idea, seed this idea among so many startups saying, dude, there is this opportunity now. So I think, over the next 1-2 years, I think there'll be very cool startups building stuff which will help this country in the long run.
Yeah, that's fantastic. Last time I was talking to you, you talked about another interesting use case of a PMLA data where you can use. Maybe you want to explain that quickly on what's that use case is, and then we go to Anuj on the next question.
Yeah, no. See, the thing is, today as part of PMLA, we are supposed to kind of spot transactions which are not in sync with what the customer profile is. But the problem today is we have to decide on that customer profile based on what the customer declares, right? So customer comes to us, he says my income is 3 to 5 lakhs. My experience is this and this, right? So we have no way to authenticate what the customer is saying is real or not, right? And then all our PMLA alerts are really based on the data that the customer entered. If a customer has malified intent, so there is really no way for us to track this as well as possible. But I think it's going to be tricky to get every customer give us account aggregator, like access to his data while onboarding. But assuming it became mandatory at some point in the future, right? Saying that the broker is mandatorily required to kind of validate a bunch of things that the customer is saying. And here is a tech platform to it. I mean, if today, if the regulation comes saying, broker has to collect net worth of a customer, for example, right, from a chartered accountant, it's done, right? As in, if today 1 million customers are onboarding, tomorrow it'll be 1,000, right? As in, so because no one's going to give chartered accountant net worth certificate, but assuming you can somehow determine a net worth using this account aggregator, and it's just a one OTP click away, so you can continue onboarding the same number of customers without really having, without really creating a drop in user experience of sorts. And then platforms like us, intermediaries like us, can then do a better job at PMLA. So in the sense, you can do a better job when we know there's something off. We have found these cases, right? As in, we found cases where a customer who hasn't traded ever suddenly one day wakes up and starts doing F&O trading, right? As in, there's something off, right? But it's still very tough to track it because potentially he could still start trading F&O, right? But there are times where someone else gives him money and trades F&O on his behalf, right? As in, so if person who's earning 10,000 rupees is doing 5 crores of F&O trading, it is. But the thing is, we don't know if he's earning 10,000 rupees, So we will probably get to start knowing this once we have access to more data. So yeah, so it's a really large use case of sorts, for intermediaries, and you can then put responsibilities on the intermediaries to do a better job of PMLAs.
No, it's fantastic. I think there's so many use cases, and we are just at the early stage. Anuj, quick one before we go on for Q&A, because we just have 7 minutes. I know you are also a data provider, and at some level you are an account aggregator too. One of the questions that keeps people asking is data is your double-edged sword. It can be misused significantly if you're openly available. Account aggregators are technically data blind. Maybe you want to explain how the data protection part of it works there in terms of making sure that the data is kind of not misused, and with the right consent only these things happens. And how are you enabling that on your platform?
Yeah, sure. So if you think of the entire architecture, I think it's been thought through very carefully. Potential points of leakage, potential points of misuse, third-party certifications are all in place. In fact, if you see the architecture and the API dictionary, you will find that every data format and the way it will be displayed, if a bank account has to be masked, it will be masked in an industrialized way. You can only see the first 4 and the last 4 characters. Account aggregators are data blind, and that means that they will never hold data, nor will they process, augment, enrich. They will not do any of those things. The way data will get pulled and the way the data will get purged is all completely well defined. The responsibilities of FIPs are pretty clear because they're signing up. The responsibilities of FIUs are also very clear because they are signing up. And then the consent architecture is the most powerful thing here, because the individual, when he is setting himself up, will allow, basis his consent and a unique OTP, to add his first bank account and then the second and the third and the fourth. And similarly for his securities accounts, similarly for depository balances, insurance, all of that. Single architecture, single set of rules, encryption standards are completely well defined. And because it's a licensed business right now, and therefore a finite number of people are allowed to access, it's almost sure that democratization will happen, but will happen within the boundaries of licensing, testing, encryption, certification, and all of that. So that's how this really works. I think the only thing to think about is that over a period of time, Indian consumers will have to learn how this entire thing is transferring power into somebody else's hands. When you see, for example, some of this new age lending, what we see in the market is that if I, as an individual, have decided to borrow 50,000 rupees, I actually go and download 5 or 6 of these apps within an hour. If some of them say that, look, Anuj, I would like to look at your phone and continue tracking your phone and SMS inbox, I just click it there because the 50,000 is so important. I don't really care whether they're looking at my SMS inbox. They may look at it for life. So I think that education part, which happens in every industry, Srinivas, which is to gradually elevate the standard of thinking and awareness of the individual, I think will remain a task for the industry to accomplish. But other than that, if you leave that aside and see architecturally how does this work, I think there is every safeguard and every element of ironcladding available and present so that it works well.
No, I think it's fantastic that you explained this, because this is a question that's also been asked quite a lot in our Q&A, and it's good that you were able to give some assurance around how this is being built. And Deepak, maybe last question before, if you have time for other questions from the panel, from the audience. Clearly, a lot of use case was discussed today. What do you think adoption of this going to be, and how quickly can we all get together to make the adoption happen quickly, so that some of these use cases that we talked about can come into play? What does it take for us to make that happen?
I think two things, Srini. I think firstly, enabling of the ecosystem from the provider ecosystem itself, which is currently being discussed as everybody has to share their data, and we'll have to see which all players will be able to get their act together fast. I think most of the data sitting with the RTAs and the depositories should be up fairly easily, but people like us who are PMS, portfolio managers, we also have data and we want to be able to provide them into the aggregator ecosystem, and we may have a slightly different period of coming on board. But it's not just the provisioning of data or the initial consumption. They will be abused. There will be a lot of players who take this data and try to abuse it, take permanent consent, try to create mechanisms for to not allow you to revoke this consent and so on. The system should provide for penalties against such behavior. That is when people get more confident that their data is safe. That if you violate the integrity or the secrecy of this data, that you will get punished. Is how, whether the regulators do it or some other part of the framework does it, it provides the feeling that, okay, well, I can trust with somebody with the account aggregator system with this data. It may take some time. I'm hoping it's really fast. To be honest, it's a technology game. So once it's developed, I think, you should be able to get something on board very, very quickly within 6 months, 8 months, a year. You should have the platform being used. But I feel it will go through its natural cycle. So give it 3-4 years. I don't think any system matures before 3-4 years in India. To get GST, it took from 2017 to now to come to a shape where the government has started to reap its benefits, and so have people who are registered with the GST ecosystem. Same thing, I think, for here. It'll take that teething troubles and all that. But you have to make a start. And better to make a start today than to wait for tomorrow.
It's fantastic. I think the reason I talked about the play out is that obviously people are waiting to see what use cases can come up, and these use cases will just keep coming up as people start adopting the platform. I don't think we have any time for questions. Many of the questions that I see have been answered. But I'd like to quickly summarize, and if we still have a minute or so, I can ask the host if you have time to move. But clearly, I think a lot was discussed today. The entire ecostructure itself, the account aggregator ecostructure, and how it's going to benefit. I heard some very interesting thoughts around, while we provided a lot of infrastructure in the past, whether people are using this to better with their money, what Nithin talked about. Is there an advisor-first ecosystem that's there that we need to play? Anuj really dwelled upon quite a lot on the 3 layers of innovations that can come up out of that, and lots of beyond the capital market, data also that we discussed. Deepak, I think you had a bunch of ideas that was from consent architecture to transition reporting and things like that, which is very, very interesting. And then I love this idea of Zomato of advisors, which Nithin kind of brought in. Overall, I think this is a fantastic conversation. Thank you all for bringing in very interesting insights on how the future of account aggregator platform will play out, especially for the capital market industry. And I'm sure, like Deepak said, in 3 years, like GST, we will start reaping this in a significant way. I also encourage more startups, fintechs, and other platform providers to come learn more about it and start innovating on top of it. Thank you very much. Over to you, to the host.
Thank you so much.
Thanks very much.
Thank you so much. Thank you to all the panelists for joining us today. And those were some quite interesting insights from a data architecture standpoint to privacy of data towards consent management of data as well. With that, what I'll quickly do is I'll quickly share my screen and let other audience members quickly mark the attendance for this session so that they can we'll generate digital certificates for them to for participating in this masterclass. You can either scan the QR code or else click the link in the description window. And those were like quite interesting points around, as I mentioned by our previous panelists. With that, without further ado, what I'll do is I'll quickly move ahead with our next session, which is on account aggregator tech rails. And again, before I move ahead with the next session, the previous conversation point itself gave so much areas in terms of, from an application standpoint itself, in terms of how can you give out your ideas for this Manthan Ideathon program altogether, in terms of how do you collate all the data, how does the consent management systems can work, so across all asset class industries. So in case if any applicants has any data, have any ideas around innovation within capital markets using account aggregator frameworks as well, those are one of the interesting areas where we would love to see your ideas. And with that, without further ado, I would like to welcome our next speaker for the day, Mr. Vamsi Madhav, who is the COO of Sahamati. Mr. Vamsi is the Chief Operating Officer at Sahamati, a not-for-profit industry alliance for account aggregators ecosystem. Sahamati, short for Digital Sahamati Foundation, aims to do what it takes for Indian citizens to benefit from digital public infrastructure that drives data empowerment and protection. AA is manifestation of such digital public infra for financial data. At Sahamati, Mr. Vamsi drives the design and education for all of its programs for building advocacy and AA in the industry, to delivering foundational technical services, designing certification frameworks, and fostering self-regulatory guidelines. Vamsi is also involved in defining Sahamati's funding and governance models, which aims to establish Sahamati as an independent representative of social enterprise. Welcome to the forum, Mr. Vamsi, and we can take ahead the session on account aggregator tech rails. Over to you, Mr. Vamsi.
Thank you, Sumit. It's a pleasure, and actually, while the excitement may not be visible on my somber face, I am quite excited. 2 years ago, there was a hackathon that I was a part of, and that was kind of the start of the consumption cycle, so to speak, of this new tech rails. I think this is a very phenomenal moment, because now with Chairperson Madhav announcing SEBI's wholehearted support for the AI ecosystem, this Ideathon perhaps is the start of a fresh cycle of innovation. So, Sumit, thank you for the brief introduction. I think it's actually quite appropriate that in the week, last week's session, Sharad of iSpirit, is a fantastic storyteller. And if some of you have attended that session, I think he's given what I call the philosophical inspiration, right? For several of you who may be looking at adopting the AA ecosystem in whichever capacity, as an FIU, FIP, or as a technology service provider, or merely just as a citizen as well. And I think the previous session with Srini, Anuj, Nithin, and Deepak, I suppose the commercial inspiration or the innovation inspiration has also been stoked. So I'm looking at my role here as providing not inspiration, but just an explanation, right? And so let me actually share my screen to present to you, how I wish to actually take the explanation through. And this is not as much a presentation. This is just a whiteboard. So let's look at this as a whiteboarding session. And the idea is for all of us to essentially understand what the AA ecosystem tech rails are, right? And speaking of tech rails, back in the day, actually, tech was supposed to be a separate, thing that the technologists did, and some of us who went down the route of a non-technical role. And I've been in the technical industry, but I've cut my teeth first as a business analyst and then as a product manager, right? Before getting into general management roles. So you always had this silo of, only the engineers and the developers understand tech while the rest of them understand business. I think that's no longer true. And, every presentation is kind of an interesting trigger for coining up new terms. So I came up with this term in my head saying, I think today, everyone has to be not necessarily a technocrat, but a technocrat, which is tech enough crat, right? I think each of us needs to understand tech enough. And when I say each of us, I think it is right from, policy makers in government or in the regulatory circles to, organizations that are driving several of these initiatives like, SEBI and the other regulators and their teams, to, of course, several of us who make a living as professionals, but we may not necessarily, be as techno savvy as our developer friends, right? But I feel that that is no longer, that's no longer useful as a concept. I think each one of us must understand enough, right? So my goal actually is to maybe paint a picture today of simplifying, in the next 30 minutes that we have, of what does it mean? Because now I think we have come to the point where we understand that this is very useful for citizens. For us as citizens, it's going to be useful. So for us as people who may want to build something using this, what does this mean? What does this whole technology really? How can we break this up, right? So that's going to be my attempt, right? And I look at it as actually first keeping what I call, and I came up with 3 S's, right? Again, as to how to define this. The first is actually the spirit, right? When I say spirit, the North Star of the technology ecosystem. And I think Sharad, in the last conversation, actually spoke a lot about this. So let me just take a minute to summarize what the spirit of this whole tech ecosystem is, right? And if I can summarize that, I think there are a few points which he mentioned. One, that the spirit is that this is protocol in the middle, not a platform. And some of these things will become clearer as we go through the details of the tech rails in the next 20 minutes as to what does this really mean. But we must keep coming back to these North Star sentences, because every time there is a conflict of understanding. And every time we tend to think of, oh, but this is not how it happens in UPI, or in UPI, or in payments, or in some other world that we are familiar with, we tend to draw parallels, and then we tend to get confused between some of these concepts. And so retaining these North Star elements is kind of critical. So the first point is that the AA ecosystem is about not any single entity or a platform in the middle, it's a protocol in the middle. The second is that the protocol is open, which means it is not proprietary. Nobody owns it, right? The third, that the protocol actually favors a multi-party system and not a single party, right? And therefore, Sharath last time spoke about UPI and how it enables specialization, etc. That's important to keep in mind, especially when you understand the role of an account aggregator and try to map it with what we may already know, right? And the fourth is that this may not appear as a direct influence on the technology rails, but there is an influence, and we'll come to it. The fourth is that the economic incentives are meant, much like both Nithin and Deepak spoke about, how a robust advisory system and advisory economics is different from a distributor's economics. The same concept even Sharath spoke about last time. Economic incentives are meant now to grant power to the user, to the citizen. I'll not say user, but to the citizen, and not an enterprise, right? So let's just keep in mind, this is the spirit. Now, on top of this are what are called the standards, right? And therefore, I will speak about what those standards are. But before I go there, it's important to understand that there is a third element to the tech rails, which is on top of the standards, which is what I call a shared service or shared services, right? And slowly we'll kind of unpack all of this and see what does this mean, right? So now let me kind of maybe take a stab at looking at what does standards mean, right? What are the standards, right? Let's kind of zoom in into this. And what you will see me typing out here is a bunch of different elements, each of which is actually hidden under the rails that a citizen ends up using. But as professionals and producers of applications, these elements are what you will find you have to deal with. And these elements are what are, in a sense, tightly, compactly packed into the protocol, right? The starting point or the cornerstone of this is actually what is called as the electronic consent artifact. This is the crux of this ecosystem. Everything is started with this being standardized. And what this is, in simple terms, is just a record structure for what consent means. Consent, permission, that we use as an English word. If we have to break that down, what does it really mean? There's a set of elements. And the starting point of the standard is standardizing the electronic avatar of something that we use in our daily life called permission, right? Now, who is taking consent? And as we all now understand, that the unique architectural decision that has been taken is that there will be a set of entities whose job, and whose only job actually, is to do this, is to take consent from other citizens, be the safekeepers of that consent artifact, which means they are the ones generating it, they are the ones distributing it. Any change that needs to happen by a citizen to that's being done on this entity. So therefore, you have someone called consent manager. Great. But what does that have to do with tech rails, right? What does that has to do is that the consent manager's interactions, and the consent manager is actually what we also usually refer to as an AA, right, as an account aggregator. But I'll keep using the term consent managers, try to be as laymanish as possible. So consent managers' interactions with citizens is the next part of what is standardized. And what do I mean by interactions? What I mean by interactions is, how does a citizen, right, get authenticated and authorized, right? Our experience of simple case of what we understand as a login password. Any digital application, you need to kind of identify yourself, and every time you use it, you need to have a way of the system knowing it is indeed you, right? So authentication and authorization of citizens is standardized. Now, who is authorizing? Is it just the consent manager? Remember, as citizens, our data is with our bank or with our insurance company or with our mutual fund company. So do they not play a role in authorizing me for actually using this rails? Absolutely, they do. So therefore, what is also standardized is the experience of a citizen in terms of financial account discovery, in terms of getting that account linked. And all of this has to be done not by citizens having to go to the bank's interfaces to again tell the bank, hey, I know you have my data. I am hereby, kind of granting my permission to XYZAA. So you better, honor that permission. This can't happen with citizens going there, which means it has to happen through system to system interactions, which means what are really getting standardized are the APIs that FIPs are essentially offering. And these APIs are consumed by the account aggregators, who are the ones that are acting as agents of the citizens, right? So what is getting standardized is the financial account discovery and linking APIs by whom? By the citizens, data custodians, right? And the term we use for data custodian is an FIP, which is financial information provider. What else? Now, Deepak spoke about in the previous session about how, the statements today that come are often unparsable. They are not standard. Maybe the advisor is able to parse the PDF of one bank, but he's not able to do that of an insurance company. And therefore, it's a very broken system. So what has also been standardized is the financial data schemas or the fields that each FIP has to implement. And this is so critical because now a citizen doesn't have to worry. He can actually trust that if he uses this ecosystem, the universe behind him, which is all the regulators and all the technocrats and all the implementers, have agreed amongst themselves that there aren't going to be technical problems such as unparsable statements. It's actually standardized, and therefore everyone has to follow that protocol, right? Now, the whole bundle here is being done in order to do what? It is being done in order to grant power to the citizen. But power to the citizen is only based on the citizen trusting. And trust means that he needs to understand that privacy of the data is actually protected in the whole ecosystem. Now, who's the one who's taking the data? The one who's taking the data is maybe the lender, maybe the advisor, right? And so how does he know that the lender or the advisor actually is behaving in a trusted manner with respect to data privacy? So what's also standardized is the purpose declarations, right? And purpose is actually one of, much like permission, purpose is a word that we use in English. Now there is an electronic avatar of purpose, which has been defined in the protocol. So purpose declarations by the FIUs also have to form a standard. It can't be today that, an FIU declares a fairly obtuse or broad or all-encompassing purpose. It has to be sharp. It has to be well understood, and well understood not just by citizens, but by auditors, regulators, courts of law. So everyone has to follow the same ontology so that, you can't get away with saying, no, I meant this, I didn't mean that, etc. Right? So this is, if you look at it, a series of components of the protocol, which are all meant to standardize some part of the citizen's experience, right? So if you just draw a line here and look at all of these as actually enabling some kind of standard, one can easily say that these are probably enabling a standardization of customer experience. And I think folks who have participated in the success of UPI, and it's still an ongoing success. We know we have a long way to go, but I think we've reached a long way as well. Almost everyone attributes a large part of that success to customer experience being standardized, right? Thanks to NPCI Common Library, thanks to a lot of procedural guidelines, and thanks to standardization of interactions through Google Pay, Phone Pay, etc., in terms of the workflow, not the UX, but the workflow that a citizen undergoes, right? So that's one part of it. But that's not all, right? Because all of this is just for the citizen. But remember, this whole thing has to act with a very low touch, involvement of the citizen. Which means there are APIs that are behind the scenes, unknown to the citizen, which also have to work in a seamless fashion, right? So now let's unpack what is, right? And it starts with first looking at, while the consent manager's interactions with citizens has to be standardized, the consent manager's interactions with even FIUs and FIPs also have to be standardized. And these are nothing but API interactions, right? And what are these interactions for? These interactions are for fundamentally for two things: flow of information regarding the citizen's permission, and then flow of the actual financial data, right? Which means we are now talking about a set of API standards that are meant for AAs to implement, that are meant for, that are meant to be exposed by FIUs and are meant for AAs to consume. Then there are a set of FIP APIs that are meant for AAs to consume. And then, of course, there are a set of AA APIs that are meant for FIUs to consume, and a set of AA APIs that are meant for FIPs to consume. So think of it as what's been standardized as the protocol is the language that these three types of participants have agreed and have to agree without deviation. It is not that there is a base standard and everyone can extend it or customize it and so on and so forth. That will break the whole notion of a standard protocol in the middle. So if you go to Revit, which is essentially the publisher of this open API spec, you will find that the APIs are organized in terms of exactly what I wrote here, which is what are the APIs that an AA has to expose to FIUs and FIPs, and what are the APIs that FIPs have to expose, what are the APIs that FIUs have to expose. We also spoke about the need for FIPs to be able to authorize linking, and that is taken care of in this aspect where FIPs have to have a standard way of authorizing linking. But when we speak about APIs, there is a natural set of best practices that also have to be part of the API standard, which is essentially authentication and authorization, not of the citizen, but for API access by the systems, right? So there are standards. The standard includes rather authentication and authorization definitions or mechanisms for API access. It includes a standard for how the API payload, which is techno speak for data, right, or messages that are passed. How should that be secured while in transit? That's a very important aspect. Anuj spoke about how there is ironcladding in all the security. This is how that ironcladding is enforced by including it in the protocol. And then lastly, which is perhaps the most critical, is that while the financial data fields themselves have been standardized, you have to ensure that the financial data, which is very, very sensitive PII, is also protected while it is in transit. So while every API's payload itself has to be secured, there is a specific security mechanism defined for financial data that is part of that payload. And all of us understand encryption as a term. So there is a very specific algorithm defined as to how each FIP, and regardless of whether it's an insurance company, bank, doesn't matter. Everyone has to follow the same algorithm. And by the way, that's the algorithm that actually is in use by Signal and WhatsApp and so on and so forth. It is well known to be an algorithm that is perhaps cutting edge with respect to protecting information while it is in transit, right, in an open system. So these are the different elements that actually come together, and they are not seen, but they are part of the protocol. And today we have, I was referring to a question that was raised, and I ended up answering it just because I thought I'd save the time of the panel. You have what, about 10 FIPs today that are live, right? All of them are banks. We'll shortly have insurance companies and even AMCs through the initiatives that have now begun, thanks to all the buzz in the last few days. We will have all of these FIPs coming on board, and we have close to, I would say, 30 FIUs that have implemented these rails. Each of them is at different stages of adopting this in terms of scale. At least 6 to 7 of them have been at it for several months, and overall we have reached about 400,000 citizens, right, having linked their accounts across the AAs that are live. We have totally 10 AAs that have gotten a license, but 5 of them just have an in-principle license, so they can't start commercial operations till they graduate to getting an operational license. But there are 5 that have an operating license, right? So across these 5 AAs, about 400,000 citizens like you and me have linked our accounts, our bank accounts, and nearly 360,000 of them have successfully used these rails to give their permission, largely to lenders. Lending is the first use case that's off the block. So all of these elements are actually being implemented by these entities. And so the question is that we often get asked, okay, this is all great, what do I need to do, right? I mean, how do I start onboarding myself? And several of you who are in this may ask the question as, say, being an FIU. So maybe you're a registered regulated entity, a SEBI registered regulated entity, or regulated by PFRDA or RBI or IRDA. So you are an FIU. You want to get going, you want to start using this. What do you do, right? And I want to just lay out what is happening in terms of the tech implementation ecosystem, right? So these are the tech rails. The tech implementation is that there are close to 30 plus TSPs, or technology service providers, who offer what one may very simply name as gateway capabilities, right? And these gateway capabilities are nothing but an implementation of the protocol. And so if you are an FIU, you are supposed to, like I mentioned, expose FIU APIs. There are TSPs who've already baked that in and offer both on-prem and software as a service models. So the easiest way for an FIU to get onto the rolls perhaps is to look for a TSP that has this and kind of bring that as part of the tech stack, right? Now, what does the TSP promise? And this is very important because sometimes there's a lot of confusion around, oh, if I take a TSP, does it mean I will have to I can only connect with the AAs that TSP has already quote unquote partnered with, right? And I'm going to answer this from a tech perspective, right? And the reason I'm saying that is what we are discussing today in this is tech rails, right? I'm not going to speak more about commercials or about legal contracts. I'll touch upon that a little bit, but I want to categorically state that all of this protocol in the middle standardization is for one promise, and the promise is that when you implement as an FIU, or if you are actually a technology provider, you are in the market and you wish to offer this, what you're really promising is one implementation that without any further technical work will work with AA1, will work with AA2, and really in theory will work with AAN, right? Whatever that number is. Today it's 10, tomorrow it could be 15. The whole promise of having a protocol in the middle is that this needs to happen, right? And likewise, if you are implementing this as a custodian of data. So, like Srini represents SBI Mutual Fund, an AMC, right? Or you've got banks and insurance companies. Likewise, if you are an FIP, the same set of TSPs typically, right, today offer gateway capabilities which allow you to become a TSP without having to build anything else. And when you get a TSP, it comes with the promise. The TSP by definition promises that regardless of which AA a citizen chooses, the TSP will be able to allow the FIP to honor their account owners demand for data to be shared after necessary validations and due diligence on whether there is a valid consent, etc., etc. All of that is baked in, right? And this is what we term as the second element of the standard, which promises something called interoperability, right? And this is a term that I think we hear often, but we don't necessarily all have the same meaning of what this means. And my attempt here is to perhaps explain that interoperability is nothing but the promise that when a participant, such as an FIU or an FIP, decides to adopt the AA ecosystem to offer services to their citizens, the rails and the implementations offered today promise a once implementation for work with anyone type of a regime, right? And whether you are an FIP or an FIU, this is the promise that you can take. Conversely, if you are a technology service provider, you are actually making this statement. Once you have your stack ready and certified, you are actually promising interoperability to your FIU, FIP customers. But then is this enough? Is this the end of the tech rails? And the answer is no. There is one more element, right? And remember, I spoke about that element. And that element is nothing but what I call as a shared service layer. And this, I think, is extremely interesting personally to me. It's indicative of a lot of new thinking that we are beginning to see. A lot of this was spoken by even Sharad. So let me try and explain this to you, right? And the reason I'm putting it here is that this ecosystem of a protocol is supplemented or complemented by a layer which, different people have used different acronyms. Yesterday, funnily enough, there was an op-ed in ET which coined an acronym called PDA. PDA, for many of us means something in the romance domain, right? Public display of affection. But the acronym crafted yesterday was public digital asset, right? And so there's another acronym called digital commons, right? Or digital public good, or open digital environment. All of these things essentially mean that there are a set of assets which are meant to be used by the public without any reservations, without any strings attached, without some party putting rules saying, hey, this belongs to me, so you've got to pay me. So there is no proprietariness, it's open. And so the whole protocol itself is open. But in addition to the protocol, there are elements that are needed. And why are they needed? I know I'm maybe running a little short of time. I'm going to take 3 minutes and then close this, and then we'll take whatever time we have for questions, right? The elements are, and let me quickly, therefore, I was conscious I may run out of time, so I have a version ready where I don't have to type this out, right? So let me take that. So this may get a little too technical, but just bear with me for this, because like I said, nothing is too technical these days, right? We all must know enough. Now this diagram is actually, if you go to, this is the Rebit's rendition of how security and privacy are expected to be implemented. And if I can quickly kind of summarize this, this box which says encryption of FI data, remember I spoke about financial data encryption, that's what this refers to, right? This box which says JWS signature is nothing but saying, we've all heard of something called digital signature, which is essentially a way of protecting data while in transit from being tampered. So, if I send a packet to you and the courier boy or someone or the transport layer is hacked and someone does some kind of tampering to the contents of the packet, the recipient must be able to verify that what was sent is indeed what I have received, right? And you do that through the concept of, a digital signature where the sender signs it and the recipient is able to regenerate it using the public key of the sender, which by definition is public, so it's available, and then comparing it to say, hey, okay, what was signed is indeed what I've received, right? So that's nothing but JW signature. And then the whole mechanism of communication is not based on a separate network. It's based on Internet Protocol. It's based on HTTPS, and it's based on something called TLS 1.2, which means, you don't have to set up point-to-point connections. You can just, interact over the internet, right? But you need to have API keys that you mutually use to authorize each other's calls to each other. And you need to whitelist the IPs of who's calling. So while it's the internet, it's not that anybody can type a website and it's expected to offer. There is authentication and authorization. Remember, I spoke about that. Now, how will all of this happen if people have to exchange all of these information prior to implementing? Imagine an N cross M. Imagine there are, 500 FIPs. There are, 25 AAs, and there are maybe 1,000 FIUs. This is a mammoth N cross M transfer of public keys, IP addresses that needs to happen, and it needs to happen dynamically because, RBI, if it licenses a new AA, is not going to stop the whole ecosystem and say, hey, a new party is coming into is joining the party. So everybody rewire your keys and, kind of ensure you upgrade. It has to happen dynamically. It has to happen on the fly. So that's where there are shared services, which are shared amongst all participants, not owned by anyone, which enable IP addresses, public keys, much like a DNS server. It's called the registry. They enable issuance of short-lived identity tokens with a set of standard, what are called claims, so that security in terms of API calls is enabled or implemented in a standard way, not, to each his own kind of a manner. There are a set of tests which each party uses to guarantee publicly that they are actually compliant, right? I mean, having a standard is not enough because I can come in and say, yeah, I am asserting that I have actually complied with the standard. I mean, who knows? I may be a rogue party, right? So there has to be an independent, trusted set of tests which everybody is agreed to. And only if I provide a test report against the tests will others agree that I am indeed compliant, right? So the tests are a shared service. There are guidelines for how FIUs and AAs must interact with each other, because interoperability doesn't just mean participants can talk to each other in a common language. It also means citizens must be able to exercise their choice without an FIU saying, sorry, I don't support redirection with this AA, right? And that's something that is happening as a layer above the APIs. That's got nothing to do with APIs. It's got to do with front-end redirections that happen, between a lender's or an advisor's front-end system and the account aggregator's screens, where all these interactions have to happen, right? So that communication also must happen in a very standard way. So there are guidelines as a shared community asset that everybody is agreed to, right? To ensure that you can write code once in the front end and that will work with every AA, right? And then lastly, the whole thing, according to the RBI master directions, has to happen based on contracts. You have to have legally enforceable contracts between all the parties. And now when we say all the parties, we're talking about 4 parties, right? We're talking about FIUs, AAs, FIPs, and of course the citizen. So how can you have an N cross M scheme of bilateral contracts when the whole system is a multi-party system, right? An AA can't do its job without an FIP, and an FIP is meaningless unless there is an FIU at the other end serving the citizen, right? So therefore, there are what is called participation terms in the ecosystem, and then there are SLAs, which are getting developed in the ecosystem, which will become binding in a manner of speaking on all the participants, because unless you agree to that as a shared standard, you can't promise great experience, right? So therefore, and I'll probably pause here. I've come to the end of my talk here. The tech rails, therefore, include necessarily shared services. These services are available for free, or the ecosystem players today, and that's where a not-for-profit body like Sahamati comes into play a role. We host these shared services. We are the record keepers, of say participation terms that are signed by any of the participants. We are the hosters of the registry and the token service, but we don't own it. It is owned by the community, and this, I think, is the most interesting, development that modern open development environments are forcing all of us to think, because we are very comfortable thinking about, oh, somebody owns it, right? We are comfortable with ownership as a concept. We're not comfortable with, although all of us use internet and nobody owns the internet, when it comes to systems we produce and use, we're not comfortable with, how does this work if there's no owner? But we've got to get comfortable, right? With that, let me kind of pause. Sumit, over to you. If there are questions, happy to take.
Great. Thank you so much for that detailed insight around the overall technology architecture of account aggregator frameworks. And as you mentioned, the public good system that is created. And I think like this is a good use case around economics or a business side as well, that if multiple entities come together and create a public good, it's the ownership to and the responsibility to keep to consistently upkeep that systems. It also lies on all the entities together, and that itself what Sahamati as an institute has been doing for this overall ecosystem. And I already have a couple of questions on the audience side that I would like to take. But there is the one specific question from Siddharth. So, like, since we have been talking more about keeping this overall architecture more on the public good side itself. So, how does the any software developer can contribute to the development? Is the overall development made open source itself, or are there any recruitments that are being done right now?
Yeah,
how can a participant or a technology enthusiast can be a part of it?
So the last question first, Siddharth. My email ID is vamsi@sahamati.org.in. Always looking for techno folks to join the ecosystem, and there are a wide variety of roles. Obviously, we are volunteer driven for the most part, and so there are several volunteers. We count close to 30 volunteers, obviously working part time whenever they can on different subjects and on different topics, right? So please reach out and we can chat as to how you would like to contribute. There is a GitHub repository that Sahamati hosts for the community, and you will find several assets there which you can contribute to. So for example, redirection guidelines, like Sumit correctly said, is something that we orchestrate. So we run a tech forum every Tuesday, where largely technical folks from the TSPs and the AAs participate today. Some FIUs, FIPs also come in. We're going to roll that out. And it is these people that create pull requests on some of these, guidelines. And then we run a process of agreeing within the forum if it makes sense. As a case in point, the web redirection guidelines already has gone through one version change because of contributions by some of the participants in the individual capacity as to how they think it should change. So we run that sort of open API and asset governance model on behalf of the community.
Right. I think that was quite a detailed explanation. I'll quickly take a few more questions. One is from Rajesh. Rajesh, we already discussed about TSPs. So what are some of the examples of TSPs and that have empaneled? And how does whom does the TSP reach out to get it certified / empaneled?
Yeah. So let me first clarify. Technology service providers are not empaneled by anyone today, right? Any entity is, free to offer its services to any potential customer, an FIU or an FIP. But what Sahamati does is we provide three things. We provide a listing service. So if you are a TSP, please approach us. if you go to Sahamati's website, you will find a tab on the website which says TSPs. And if you go there, you will find we've listed close to about 40 plus technology service providers, slotted into what they offer, right? So we provide a listing service, number one. Number two, we provide a membership to technology service providers. What does the membership grant them? The membership grants various things that we offer, right from domain sessions, implementation assistance, workshops with customers, jointly held, and so on and so forth. And lastly, we offer something called an intermediate certification. Now, what does intermediate certification mean? See, ultimately, TSPs are not the regulated entities. They are not the ones that are taking consent from citizens and processing data. They're only enabling an FIU to take consent, and they're enabling an FIUP to give data. So the certified entities really that we offer as a shared resource is meant for FIUs and FIPs. But what we've learned in the market is that if a technology service provider who's offering that gateway can prove to their customers that their product is already passing those tests, then it just helps everyone. It helps the technology service provider, communicate the benefits. It helps the FIO or FIP reduce the confusion. Oh, how much more do I have to do to join? Right? It becomes an easy onboarding process. So therefore, we've called something as an intermediate certification framework or an intermediate certified. As an intermediary, as an intermediate entity, TSPs can get certified. How you do that is you essentially partner with empaneled certifiers. So there are 3 empaneled certifiers. All of these come from the security, audit, and certification domain. They are listed on the website. We encourage any TSP to contact any of the empaneled certifiers. We don't get involved in the commercials and all of that stuff. You can use their product to get an independent certificate. The certificate will have Sahamati's brand name because Sahamati is, in a sense, managing the shared resource of tests, and it will have the certifier's brand name. And you can show that to any of your customers to say you are an intermediate certified entity. That's how we do this.
Right. I think that was quite a detailed explanation. With that, I'll quickly move ahead with in terms of a couple of I'll combine 2 questions together. So Modit and Aziz asked around applications around blockchain. So again, just to set the context correctly, as a public good, account aggregator frameworks can be managed and built upon by multiple entities together. Vis-a-vis, if we notice, it can or potentially can be done using blockchain as well. So, are you guys under consideration to implement blockchain as an ecosystem? If yes, how? And can account aggregator rails be used over a blockchain ecosystem as well?
Yeah, so my personal view, all of our energies right now in the ecosystem are, I would say, 200% focused on just making this live for citizens, right? I mean, there is a rail, it works. Like I said, we've had close to about 10 months of this ecosystem having gone live since September 2nd. And we know it works, point number 1, right? We know there are, hopefully we will reach 500,000 shortly and then 1 million in the next few weeks. 1 million citizens in the next few weeks would have used it successfully to give data and get a loan, right? For example. So right now, in the last few months, it hasn't been as much about rejigging the tech rails to see, can we make it more efficient? And perhaps that conversation can start. Will blockchain lead to better efficiency for citizens first and better efficiency for participants? We haven't had enough of a commentary in our ecosystem, frankly, on that. But what we focused on is just making sure that, adoption of this itself happens at scale with what we have currently. So too early to say, Sumit, to your rendition of the question about blockchain.
No, I think that's itself it's better not to reinvent the wheel, but it's better to move fast with the current existing wheels itself that we have. With that, I think I'll take maybe one more question. But before I do that, in the meantime, what I'll do is I'll quickly share my screen so that attendee members can mark the attendance for the participation certificates. And I'll also talk about more in terms of consent architecture as well. So the whole account aggregator framework is based on like consent-based data sharing by an individual financial consent, for financial assets. So if can a tax authority or an investigation authority who wants to get access to investors' data, can they do that without the individual's consent?
So strictly speaking, this is outside of the purview of anything that RBI or Rebit or the ecosystem, that we as Sahamati talk to deal with, right? This is in the purview of what has yet not come to life, but we all know that a lot of work is happening, the data protection bill, right? And I don't think I am intelligent enough to make any statement that is valuable to this audience, except to say that the weight of thought is obviously going towards finding the right balance between national security interests, right, where consent is really meaningless because you need someone's data to keep the nation secure, versus individuals' privacy needs. I think the jury is still out. I don't have any knowledge that none of you has on that aspect. But if you look at what the weight is towards, it is towards protecting the individual's privacy. So, there is no unilateralism that I think anybody is supporting, and it will be very, very purpose specific. So you mentioned tax or investigation, right? There are two different potential purposes, right? An investigation for what? So I think it will become very granular to offer the window of non-consent based data access. It has to be granular, it has to be sharp, it has to be focused. But the weight of everything we are doing in the ecosystem today is actually the opposite. It's actually to educate citizens, and more critically, often we have to educate participants. It's not your data, it's the citizens' data. We have to also, in that context, tell them it's not even the government's data, right? It's the citizens' data. And therefore, that's what we are focusing on now. Let's wait for the data protection bill to see what comes up.
Right, and absolutely, I think the overall public good as a system itself talks about that it is by the people and for the people itself. So make sure that as as a retail audience members, you can the education of keeping your data secure and giving the power of controlling your own data. It's itself is a big success story. With that, I'll take one specific last question. The attendee asked that as an FIU, how difficult it is to integrate this data into an application or into an app, and what kind of certifications and licenses are required?
Yeah, so like I mentioned, the tech work that is required to, when you say integrate data into an app, what you're really meaning is, as an FIU, get integrated with an AA, right? Both on the back end and the front end. So, how difficult is it? I mean, I would qualitatively say it is not difficult, because you've got, there is no scope for a big design cycle required here, right? It's already designed. The rails are there. There are TSPs offering implementation. So it's therefore only a commercial construct, right? Pick a TSP of your liking, and the TSP has already got the product. And then all you have to do is enter into the commercial arrangements with AAs to start receiving data. After that, how do you process data, which is the second part of integrating data into an app, is already there. Today, as an FIU, you may be getting data through a PDF upload or net banking, and that data comes into, say, a business rule engine, which is making a loan offer. There are, again, TSPs, the same TSPs that offer gateway capabilities. Several of them also offer capabilities to plug in the data into your business rule engine, right? So I would say it's not difficult at all. I mean, that's hardly a stumbling block. It should be, I would go out on a limb and say, depending on your internal procedures, within 6 to 8 weeks, you should be onboarded onto the ecosystem live, right? And the same TSPs will help you get certified as well. In fact, several TSPs today offer a single window, not just for their product being pre-certified, but also the commercial negotiations with the certifier, and the operations of running certification on behalf of the FIU. So several TSPs offer this single window service, saying I've got the product, I will also give you the service, and I'll also drive commercial negotiations with AAs. In fact, some have started even doing that. So it's really not difficult at all for an FIU if you adopt this approach.
Right. No, I think that was quite an interesting conversation, and it's really great that you touched upon very granular level of the overall like ecosystem that Sahamati has built upon. And with that, I would like to thank you for joining us today and sharing those like detailed insights on for this AA tech rails system as well. And I think like as a like any of the participant who has attended the previous session as well as this one, as well as the like last week's sessions as well, which was like talking about areas around account aggregator systems itself. There are multiple areas of innovations which are still as an ecosystem is requiring, and as an individual, as relevant ideas can be submitted for this Manthan Ideathon program itself. So it's up to the applicant itself how they are able to innovate their ideas and submit their application. So we look forward to more relevant applications ahead. And with that, I would like to thank you, Mr. Vamsi, once again for joining us today. And I would like to welcome Mr. S.K. Mohanty, who is the whole-time member of SEBI, to give the closing remarks. Mr. Mohanty took charge as a whole-time member for Securities and Exchange Board of India on June 25th, 2018. Shri Mohanty belongs to the Indian Revenue Services 1991 batch. He looks after the Corporation Finance Department, Office of International Affairs, regional offices, local offices, and matters related to National Institute of Securities Market, General Services Department, and Corporate Finance Investigation Department. Prior to taking charge as a whole-time member, Shri Mohanty held the position of Executive Director, Securities and Exchange Board of India on deputation. As ED, he was in charge of Commodity Derivatives Market Regulation Department, Department of Debt and Hybrid Securities, and General Services Department. Prior to joining SEBI on deputation, Shri Mohanty served as director at the erstwhile Forward Markets Commission, where he was in charge of the market policy and the legal affairs division. As an IRS officer, he has served at Kolkata, Mumbai, Nagpur, Jamnagar in various capacities. I would like to welcome Mr. Mohanty to give the closing remarks for this session.
Hello everyone, respected speakers of today's knowledge sharing session and all the participants. A hearty welcome to you all to SEBI's Manthan Ideathon. First of all, I would like to thank all the speakers who delivered extremely informative speeches that are so valuable to both SEBI officers and to the participants of these knowledge sharing sessions. I'm sure all of you have learned various aspects of the securities market and have benefited from the vast experiences of these speakers. We have seen a good number of participation in the knowledge sharing sessions, which spanned over the course of last 5 weeks. The participants come from different backgrounds like students, professionals, from fintechs and startup domains, etc. The knowledge sharing sessions were delivered by various industry leaders and experts, including Mr. Nandan Nilekani, who talked about how giving control of data to citizens will unleash the next wave of growth in securities market. SEBI chairperson Mrs. Madhav also shared her thoughts on innovation and data. Dr. M.S. Sahu and Mr. Jain Gupta also discussed on building regulatory capacity in the ecosystem and ease of onboarding by making simplified KYC. The other topics were also ranging from ESG, RegTech, SupTech, overview of commodities markets, regulatory disclosures, combating cyber threats, etc. These masterclass sessions were well received by the participants. In order to promote innovation in the securities market, SEBI has issued a sandbox framework last year, which provides access to test environment with market infrastructure institutions and regulatory environment with SEBI. You all may take benefit of this sandbox framework by visiting to Innovation Sandbox portal of SEBI. Further, to facilitate innovative ideas and identify various themes, for the continuous innovations, SEBI has launched this Manthan event. Manthan, as you all know by now, will facilitate the creation of a pool of ideas and innovative solutions revolving around the securities market. Going forward, workable ideas emanating from this Manthan Ideathon exercise may translate into possibilities and prototypes through a hackathon. I would urge participants to submit their ideas to improve the securities market, especially in the commodities market, which impact the agro and non-agro commodities. I would also love to invite all to actively participate in this Ideathon event and submit any idea coming to your minds, even though it seems unwise or trivial. Because everything begins with an idea, all sorts of ideas have potential to change the world. For participation, kindly register at manthan.devfolio.co and submit your ideas by May 14, 2022. Thank you. Have a good day.
Thank you so much, Mr. Mohanty, for giving those closing remarks. With that, I would like to thank all the speakers as well from current session as well as the previous sessions for joining us. All the applicants, all the participants for joining us. Make sure that you are submitting your ideas well before the deadline. The deadline is 14th of May. We will be hosting one more Ask Me Anything session next week. So if you have any questions about the application process or for this program, make sure you are attending that session and solving your questions. Make sure you are also like joining our relevant communities. We have a Telegram channel, we have a Discord group as well, where participants can interact with the core team as well to deliberate your ideas and submit your applications on time. The link to the application form is right in the chat window below. So go ahead and submit your ideas which are focused around innovation within securities and capital markets. We have already 2,300 plus ideas, but we are still looking for more and we would love to see your ideas. With that, I would like to formally close the Masterclass series here and thank you so much for joining us.